We're recording.
We're recording, and welcome to Tree Amigos, as we say in Chicago.
It is in Chicago.
Two Tree Amigos.
Trees.
MP, the visionary that he is, sort of like a Jeff Bezos, has switched us over to the 4-day work week.
Mm-hmm.
And on my day off, where I will come back is to do this podcast, to talk to you guys about some levels in these markets on a Friday. How you doing? MP, I see you're in the office.
I am in the office. I am part of the 5-day work week still, the old school style. I'm a grinder.
Yeah, I got to quit the grind a little bit, as I feel like when you have the 3-day weekend, I feel like you go too intense on the weekend, and then you got to work harder into 4 days, and I'm in a cycle of destruction right now. So
Well, you young
Come join us on the 5 days, Jack. Come join us 5 days a week.
Absolutely. So as we look, we were just talking about like classic Friday afternoon sort of trades coming up. I think I'm going to throw this out here before the news of the week, before anything else, is that I think we're in a little bit of a holding pattern until this election.
Hands down, without a doubt. I mean, that's what we just talked about on the podcast for Limit Up this week. You, me, and JD, we talked about that. And I think we all walked away with saying the same thing. It's going to be ranging. It's going to try and it's going to be bigger swings throughout the day, but we're going to stay in a relatively decent range until this election comes to a close.
Oh, yeah, I agree with that. Yes. I still think it's gonna. We mentioned it earlier and talked offline about like it needs. I think it needs the mom and dad, the government to come in with some stimulus before they go. Oh yeah, everybody has money. So sideways action, but hard to catch a bid, which means to me, we'll just start steering. I think we're going to keep slowly deteriorating, and it probably won't be a big sell-off or anything. But yeah, I still don't. I mean, the perma bear in me still thinks that we found a good high, a couple of weeks ago?
Yep.
Or more than that, I think. And then it's just hard to get back up there. It doesn't have any stimulus coming. And then it also has election coming. So you have all these, unknowns, and also folks are losing their stimulus stuff. But now they're talking about it just back under talks.
So yeah, so I think a new plan just got put forth of like $2.4 trillion for a stimulus package. I don't know if that's going to go through. I think there's probably going to they're going to try and find a little bit more in the middle, but it'll be it's back under talks, which is good. We need to see something. I think you're right. We do need that government influence if we want to see these things go higher, it needs something like that with everything else going on.
I think occasionally it's a good idea to put yourself in the shoes of obviously the next move is going to require real money behind it. Mm-hmm. And if you're a real money person, you have 40 days till the election. How confident are you to go one way? Like that's why I think the range thing is happening. Like, are you really going to buy it? Think it's going to be new highs before the election?
Mm-mm.
Nope.
Are you,
no.
Are you selling? Like, that's why I think we have this sort of like, the VIX curve right now is, I think it's the biggest planned volatility event ever is happening November 3rd.
Yeah.
And with all that volatility in the line, I feel like everyone's kind of sitting on their hands a little bit. There'll be some ranges. Mm-hmm. But I just can't see a world in which it's going one way strong or the other.
I think you're spot on, Jack. I think there's way too much uncertainty right now, and we are seeing that in the VIX. The VIX is back spiking over 30 again. I mean, we were pushing 20, we were pushing 17 a month and a half ago, and now we pop right back up.
Mm-hmm. Yep. So that sideways action is. I mean, the markets. We all said we were like, how does it keep going higher? Kept going higher. So maybe it's going to take a little sideways action. The markets go kind of three directions: up, down, and sideways.
Yep, that's profound. Yes,
it is profound.
But you're dead right, because
your entries.
In previous episodes of this, you're the perma bear. I am the. I don't like to call myself the perma bear, but yeah,
I'll stick to being the perma bull.
Perma bull, but even I feel like this is a rare time, I think, where we all sort of agree. I just can't imagine what the primer would be right now for making a big money move, which is what's going to take one way or the other.
I think you're spot on.
Yeah.
We have to wait.
And Jack, I got to correct you. I'm not a perma bear. I'm a perma bear in this time frame. in this time frame. Not overall. Overall, I'm a perma bull. I mean, always bet on us on the U.S. market. They rock.
They've paid out over the last 75 years, give or take, for a majority of everything. So, hard to argue that.
Well, it's like, if you mind me getting a little philosophical right here, is I think that that's like the exact right view to take, because there's only two options. Either you think that we're going to be killing it in 30 years, or it's all going to to be dust.
There you go.
There's no like meandering around lower for the next 30 years. I'm completely right with you. And I believe in the ingenuity of America and the world. I believe in the ingenuity of people. So I think that's a good place to take it.
And a bit of Darwin theory. We're going to evolve and figure it all out.
But so like, what are so as we look at like the ES, for instance, Dan, do you have some levels that we're looking at right now? Because
absolutely.
It is different. Us talking, like, I feel like we've all had like directional biases. Is that how you say it? But like now we're talking about range trade. So what are some levels people should be looking at?
Absolutely. So when we're looking at the S&P, so actually I'm going to step back a little bit and kind of explain this. I had a conversation with one of our coaching clients yesterday, and the first thing I said to him is, when you sit down every week, get an idea of a range that you're going to look at. Where's a high side in that range? Where's a low side in that range? Even if we're directional, finding those levels is going to help kind of create or paint a picture around the markets. And you do that. I will go monthly to a weekly into a day. And so,
you know what I call that? I go, that's a top down. I always look at it as like a satellite. You're getting a whole picture of the globe.
You're on Google Maps, and you're on Google.
Exactly.
Until you see like some guy with his
Street
face
view.
blurred out. That's
exactly
your 5 chart is the guy with his face blurred out.
I'll show you. So first off, you guys, I've talked about my cards. I love having hard cards.
Good Lord.
First off, here's the weekly and my S&Ps, my chicken scratch. So looking at my chicken scratch here, I've got long market.
And a really good benefit of what you're doing while you're looking for your chicken scratch is the fact that, like, you're giving yourself these boundaries. Like, you're not saying it's going to the moon or it's going to zero. You're giving yourself a little zone of which the market, is going to, probably flirt around in.
Well,
and it's good to know. It's a good.
Hogue would call them his areas of importance, and I think that's like the right way to refer to them. It's not like if I had a level that I knew it was going to bounce off of or break, I would tell y'all, or actually I would just do it myself and make a ton of money. It's more of, you have to evaluate once it gets to these levels.
Right. And that's the big thing. So like looking at S&Ps right now,
it pulls the bias out. Sorry, Dan. It pulls the bias out a little bit of the thing. And when it comes down to an area of importance, you watch it, you listen to the markets. It's going to tell you if it's strengthening up or if it's looking weak at that level, and then you make your decision.
Yeah, and that's what, when you get to these levels too, ask yourself, where's my risk in this? Am I going to be cheaper taking a short? Am I cheaper taking the long? What's the market telling me? Where's the order flow coming in? And that's going to help kind of make that decision-making process, drop the bias out of it. So for example, S&Ps right now, looking on my weekly levels, I've got 3380 still holding strong up above.
Yep.
I love that level, but to get there, we have to get through 3280, which has been paying awesome. Earlier this week,
and 3,300, a big round number,
and a big BFRN. Earlier this week, I mentioned on one of our shows, I said, look, the market bounced off of 3230. There's still a lot of business to be done down at 3230, and that's where this market has fallen back into, and it's ranging out there. So when I looked a little bit closer, I actually was telling you guys this morning, I go, my level this morning on the market forecast is held in the S&Ps. I was just looking at a daily here, and I was like, 3254 up above, and down below 3234 below that I had 3210. So if you want some pivot points, some levels to look for some pivotal
areas of importance.
Areas of importance.
Areas to keep your eye on.
Yeah. There's a couple in the S&P, but ultimately as I look, bigger time frame, 3280 up to 3380 is kind of that high side range. Look for great opportunities in those levels. And then down below, we also have 3089, which will be that 15% retracement from the high. So 3089, if we get down there, watch out. There could be some action. Volatility definitely will spike. And I think you're going to see Look, I think you'll see action. I'll leave it at
But
that. I'm not even going to say.
Your 3210s all week long have been a pretty good area. 10, nothing's for sure 3210 exactly. I always say the area around there.
Right. I actually said that this morning on the forecast. I was like, look, I have 3254 up above, but let's kind of range this. And I was like, okay, so maybe the range is like 47 to 58. And that was kind of how I was looking at it. But you throw a level out there as the market approaches, then you watch that area, see the reaction.
Well, I mean, as long as we're keeping the Chicago theme from how I opened this episode, let's talk about two tree. Let's talk about the Nasdaq. All right,
Tech's taking the hit finally. I know.
Well, they're coming back down to earth. Is what they're doing.
It's about time.
Yeah.
Michael's over here complaining beforehand about the new Apple
Did you see
product.
it fall out? Did you just see it fall out of my ear? I was sitting here talking or listening. I was listening, but I was like, and it fell out of my ear. I hate these things.
I mean,
Apple's
the way
taking a hit. Apple's taking a hit since the split.
The way Apple was priced, it was like they were expecting, some sort of like eye worm that you dropped into your brain and just did nothing but buy Apple products. I mean, like
guys, I'm not gonna lie. I got an iPhone, iWatch, Apple headphones, and my MacBook sitting right there. I mean, I'm a product of Apple.
Oh yeah,
because it's easy.
I'm a total product of the system too. I got my Patagonia fleece, my Apple phone.
I'm not a product of Apple only. I'm a product of Apple because the other choice is Android or the Google phone. Like
the Google people seem nice, options. Mike. Why don't you trust them?
If the text isn't blue, I'm not talking to you.
I'll give a quick shout out. The one piece of Copper Harbor, Michigan. If you guys get a chance to go there. Gorgeous. I'm
up there at least once or twice.
You go snowmobiling up there. I loved it. I'm going back next year. So as we talk about the Nasdaq, which is like the opposite.
Bring it back to Nasdaq.
Yeah, of course.
So finally had a nice.
If you're going camping up there, now let's bring it back to Nasdaq.
Yeah.
Trended lower this week, so it's been the strongest of the three for quite some time. It's finally starting to break down. We've seen 3 or 4 down days here in the last week, but tighter range. So the range here this last week was 570 points, which is pretty much a lot tighter than we have seen. And here's some areas to pay attention to over the next week. These are my weekly levels in the NASDAQ. It's 10,600 down below and 11,200 up above. I really like those. And since we're going to stick to this theme of tightening things down and talking a little bit closer, I had a couple levels here for the NASDAQ today. It is Friday, September 25th. I said 10,000. 730, 10,830, and 10,960 levels I liked, and they're given some opportunity.
So the NASDAQ did do well. I mean, since the split, remember we talked about the splits when stocks split, they're gonna hammer it.
Yeah. Remember when Tesla rallied like 50% off the idea of it splitting?
Yeah, and then everybody got in, and they're like, "Sweet, I have more shares." Well, I don't know, everything they caught everybody in that well, they caught, I hate calling it dumb money, but it's the folks that just jump on board the last in those.
It's called gritty money.
There you go. Greedy money or gritty?
Gritty.
Okay, yeah. Yeah, jumping on in, and man, was that NASDAQ pullback off its high strong.
Oh, it was really strong. And you think about it, you saw, speaking of these splits, Tesla having their battery issue. That was a major issue. And Jack is excited.
I am amped up, right? Can we talk about battery day for a second? Like, if you
I thought we were going to talk about Monster Energy real quick.
Absolutely. But like, everyone's talking about like part of this huge melt up in Tesla was that it was A, going to join the S&P 500. It didn't.
Didn't do it.
B, that on battery day, Papa Elon Musk was gonna like cure every disease in the world. You know what I mean? Like, and then that certainly didn't happen. I mean, like, battery day was a complete flop, and this thing is still trading. Remember to multiply its share price by 5. It's still
it's still just under $2,000 a share.
Right. It was at 311 at the bottom. This year.
Well, real quick, just to add to this one, because this is interesting news.
311.
Yes.
300.
Yeah.
Yes.
Like Nebraska band 311.
Yes. The 3. Oh, Omaha Styley. Omaha Styley. Love it.
But just to add into that, remember we just saw California announced zero emission new vehicle sales by 2035.
2035.
That's going to be either a huge thing for these electric vehicles, which I assume it will be. Michael, I know you're a fan of another company, Rivian, out there, Illinois company, right?
Nicola's getting a bloodbath over there, though.
Well,
Yeah,
yeah. I mean, because if you
struggling.
push a car down the hill and pretend like it's running, yeah, that's gonna be problematic.
Look, look, the motor's not on and it's moving. It's electric.
Yeah, it's a gravity powered vehicle. Dan, you're getting a little quiet. You're getting a little quiet again.
I am.
Yeah.
Our tow capacity downhill is incredible, but just don't. As long as you're not going uphill.
My truck gets about 12 miles to the gallon up, on flat road. But if I'm going downhill, I get about 39 to 40 miles per gallon. I can just throw that bad boy in neutral and let her roll.
There you go.
That's the key. But I mean, like, obviously everything's going electric, right? I mean, like, California's always going to put out some number that's going to be ahead of everyone else, but it's not like, I don't see like, diesel making a huge comeback in the 2030s or something like that.
Yeah, no. So give me what are we talking about with the Dow? It's I used to trade the Dow in the old Dow pits.
Daddy Dow here.
Daddy Dow.
Here's what we got. Dow was having a good week the prior week. This last week it has trended lower.
It's got all that new blood. Remember all the new blood that came in there? Salesforce.
The millennials are taking over the Dow.
Yeah, all those companies that Generation Z cares about, like Salesforce,
Right.
They're all amped.
Exactly.
Like my nephew is all about putting like one share of Salesforce on. He's just
I'm sure he has a bunch of shares of DraftKings and all his other fun stuff.
Yes.
Well, I want to touch on that in a second, but I'll give you the quick rundown on the Dow. 4 down days, but it beat pretty big range over the last week. A little over 1,400 points because we saw Monday Dow went down 900, rallied another 500, end of the day down 350, something like that. So Monday was really the range. Couple things to be looking. This is the only one of these three that has not made an all-time high in the last month and a half or whatever since the crash in March. So range I'm looking at here, 26,580, and we're making it a little bit bigger, 27,650 above.
About 1,000 point range.
A little over 1,000.
Yeah.
And that's kind of the range on the holistic view I'm talking about here today. But I will say this, because yesterday was one of the first days I really actually sat down and I analyzed the Dow. I did it with another coaching client. We sat down, we broke it down pretty good. The Dow over the last couple weeks, when it established an overnight range and opened up within that range, it ranged out all day and gave awesome trades at fading those extremes within an overnight range. So,
and for all you range bound traders, it's called fading the extremes. Goes in a channel, market comes up, hits an extreme, sell it, blah blah blah.
Yeah, we'll to make a graphic of that.
I just did it. What do you mean, Jack? I just did.
I feel like we need that as a GIF that we just put in, like, it's a range trade between channels.
So that's how you do it.
So you mentioned DraftKings a minute ago. Just wanted to point something out that I find interesting. First off, these betting companies that are public, their stocks are crushing it. Penn National,
shocking,
right? So Penn National, they're the ones that acquired a large stake in Barstool Sports a few months back. That stock is just soaring. But another one I found interesting, up drastically today, is William Hill. It's a UK company. UK company.
It's because the United States is saying, hey, you can start betting. And now people are like, well, you know what? I'm at home and I got some cash. And
I'm not paying to travel every day to work.
Let's get some action.
Let's get some action. Yeah.
Yeah.
So jumping on that wave. So that wave's, that wave's been hot for a little while. So William, I was just watching on Bloomberg. William Hill.
William Hill. Yeah. Skyrocketed today. So I find that interesting. Definitely, as you think about stocks and your people are looking at other things to look at, this millennial thing that we talked about a couple weeks ago, it came back again today, thinking about those millennial kind of companies. they might be the way of the future. We're seeing them enter into the Dow 30, which is a huge thing. They're knocking out, I mean, Exxon from the beginning. They knocked them out.
Raytheon,
Gone. Huge names that are now
get
starting
out
to
military industrial complex.
Yeah, and
Get
oil
in,
guys, you oil guys.
Sayonara.
Sayonara. Let's bring in the gambling and the you know.
Okay, so speaking of bringing in, let's bring it into what next week October hits. October 1st is, I think, Thursday of next week. It's Friday, September 25th. We're going to head into October. How do we end the week, or how do we end the month next week?
I end next week. The 2nd will be my birthday, so I'll be out celebrating.
I guess the markets are going to rally, right?
Markets. Well, that's the trade. It's Hogue and I jokingly call it the Hodgman trade. If Hodgman's off work, the stocks rally.
Well, there you go.
It's been that way for the last couple of years. I wouldn't put much faith in that, but I think we're heading into October. Gosh, it's going to be – I think it's just going to be a volatile October. Going into
Q3 ends, right?
Q3 ends. We enter into a new quarter. And here's something I found really interesting, and I read about this recently. I think it was a Wall Street Journal, but I'm not 100% sure. They talked about how the economy has been okay this summer with travel being down because the summertime is not that huge corporate-type travel. It's families taking road trips, which a lot have still continued to do. Going into Q4, this is where corporate travel is going to take that huge hit. So companies like Marriott, Hyatt, things of that nature, the airlines, the travel
go
in general.
secure that Christmas bonus. You know, you
right.
gotta travel,
so
do your thing.
All that's getting canceled for Q4. So these corporate sales, corporate travel, corporate businesses, corporate dinners, all that stuff's kaput.
I thought a lot of this companies, airlines, are talking about furloughing if stimulus doesn't come back in.
October 30th, if the stimulus isn't here.
Keep an eye on it.
I don't even know if they're talking about furlough anymore. I think it's just firing the people that are furloughed.
It's a full release, I believe.
It's full, geez.
So it could be. I mean, it could be a bloodbath of a month too.
October to me is going to get very exciting. That's what I think. I like October. October trades are always great trades. I've had some of my best months in October. There's a lot of people participating in the markets typically in October every year. Markets are always seasonal. You know, you got your holidays because people like get away from the markets, enjoy their families, and come back in, and that's where the money calms down and fires back up. So October is going to be action. Now, what is that action? It could be sideways action. It could be sideways fast moving where you get a little like the whipsaw.
Then we might see 75-point ranges in the S&P. And yeah, they're huge ranges for the day, but we may only see a range over the next month of 150 or 200 points.
That's what I was going to say. I think plus or minus 100 on where we are now in the S&P is like what I'm looking at for October. I just cannot, absent of some catalyst, I cannot see what's going to move it like in a trend in one of those two directions. I feel we've pitted out our spot right here. And getting ready for the big show coming at the beginning of November. So it could be volatile, but I think it's range bound.
Well, economic data is going to start coming. You know, I mean, without the stimulus, artificial, you know, prop up type of stuff. You know, it's still there, I'm sure, a little bit because we throw trillions into the market.
It went directly.
Takes a little while to digest that bite.
Right. Well, that's the thing. I want to kind of say one thing about this month of October. Come October 30th, be done trading for a week because October 30th is going to be a Friday. Sunday night, the 1st, is going to be anarchy. The 2nd is going to be, I bet you the 2nd is going to be dead silent. And until we open up the night of the 2nd at 5 o'clock, I think that volatility is going to start to go, and you're going to see all the computers shut off.
Dan,
they're not going to make sense.
The whole podcast about this is, guys, don't go out there, guys and gals, don't go out there and get your face ripped off on
not worth
election night. It's not worth it. It's really not worth it.
It is when all the gamblers do come out and play the it's going to do this, it's going to do that, and that's good advice. You can pause. Let the markets digest new information. possibly new administration, possibly not, or the thoughts of, it's going to start factoring all that in.
Without a doubt.
Yeah, because at that point you're gambling. You're like, everyone likes to and I do the same thing. I like to think I'm Michael Burry or whatever, like The Big Short or something like that. You get too much into that mindset, you are going to get your face ripped off. So just be careful out there, guys.
So is that the quote from the Three Amigos? Is don't get your face ripped off?
Don't get your face ripped off. There's the title for the episode.
There's the title of this episode. I actually it's nice on a Friday to come around, and I actually enjoy this conversation quite a bit. I just loved digesting some of the stuff with you guys. So
well, hopefully it doesn't feel like work because today's your day off.
No, man, I got a haircut at 3. I am enjoying this day to the fullest. I'm gonna go out and walk my pug right now. It's gonna.
There you go.
So
there you go.
I mean, it's beautiful.
I think this is where we'll call it at this point. We got a little bit off track, but I kind of like that.
That was fun.
Yeah, it was fun, and we'll see you guys next week at some point. In the meantime, it's Friday. Have a great weekend, y'all. We'll see you next week.
See you guys.